the Federal Reserve announcing its first interest rate cut in 4 years today, dropping the benchmark rate by ½ a point.
And Fox 5's Teresa Priolo has more on today's news and the potential impact it can have for local businesses and homeowners.
It's the announcement we've been waiting for. The Federal Reserve slashing interest rates ½ a point to roughly 4.9%. It's the first major cut since the early days of the COVID pandemic.
The Fed is a really important actor in that it basically controls the price of money, the flow of money.
The news appears universally welcomed, in part because the federal funds rate acts as a benchmark for borrowing rates in the rest of the economy. The funds rate is the rate banks charge each other. It's the basis for what will be your car loan, credit card loan, or even mortgage rate.
The biggest piece that I see for consumers is the consumer confidence, right? So by interest rates being reduced, it's going to help their cost.
The move, however big, wasn't unexpected. Wall Street anticipated it, so did the big banks. There's a chance this could impact the ease in which you buy or sell a home, especially in such a competitive market.
They're going to get very excited that ½ a point so they can come out and shop. In fact, today, we've got 2 calls for the appointments this weekend. But it's going to create more demand, which is not necessarily good because that'll drive prices up.
The key will be unlocking the limited inventory, and to do that, rates need to continue to drop.
Cut in interest rates is just adding more buyers. We don't have enough houses. So in order for that change to occur, we need deeper cuts and some successive cuts so that the people with those golden handcuffs, people with the 2.5% and 3% interest rates are going to say, okay, now the differential is enough where I can actually cash out.
As for what this says about the U.S. economy,
the Fed feels like the economy is in good shape, but they have seen some weakening in the job market. And really what they're trying to guard against here is further weakening.
Today's news isn't the end of the Fed action. Experts say they'll likely cut rates another ½ a point by the end of the year, a full point in 2025, and 1/4 to 0.5% of a point in 2026. That's the latest from Montclair, New Jersey. Teresa Priolo, Fox 5 News.